Hello and welcome. This is Collier from Make Your Money Work for You. Congratulations on making it to week number 2, Protect Your Investment. In this session, we're going to talk about trading orders and what that means. You're going to learn what orders to use to buy and sell stock, as well as how to protect yourself by using specific trading orders. Now, the goal of this training is to teach you what command orders to use when executing a trade. Let's talk about trading order terminology. In order to successfully trade, you need to know trading order terminology. When you buy and sell stocks, you will use orders to do so. The most basic commands is buy and sell. This will be the order that you will use most often. To buy stocks, you will select the buy command. To sell stocks, you will use the sell command. There are also opportunities to make money in the stock market when a stock is going down. We typically know how to make money when a stock is going up. We buy low, we sell high. When a stock is going down, an investor can actually sell high and buy low. If you think a stock will go down in price in the near future, you can use the command sell short. This command allows you to sell a stock that you do not yet own. You borrow the stock from the brokerage and sell it at market price. At some time in the future, you buy the stock back so that you can return it back to the broker. Why would you do this? Well, you would do this if you think the stock will go lower in price in the future than the price it currently is selling at right now. So you borrow the stock, you sell it at a high price, you collect the proceeds, and then you wait to buy it at a lower price in the future, and you keep the difference in profit. When you buy the stock back, that command is called buy to cover. You buy the stock to cover what you borrowed earlier. For a lot of people, this concept can be difficult to understand. So you're going to want to review this several times, and this is probably not a trade that a brand new trader would do. But here's an example. Let's say that I own a brand new pair of Air Jordan sneakers. You ask to borrow my sneakers and you sell them for $400. Later, you buy a pair of the same new Air Jordan sneakers at $200 and you return them back to me. I'm happy because I got my sneakers back. You're happy because you made a $200 profit. These next set of orders help you buy and sell stock at predetermined prices. Sometimes the stock you want to buy or sell will not be at the price that you want. You can use these commands to automatically buy and sell the stock at the price that you want when the stock reaches that price point without you having to be there. Market order. This command executes the buy-sell price at whatever the current price is. This order will get you in or out of the trade immediately at whatever the current price is. Limit order. This command allows you to buy a stock or sell a stock at a specific price or better. A buy limit order can only be executed at the limit price or lower, and a sell limit order can only be executed at the limit price or higher. A limit order is no guarantee that you will execute the trade. Let's give you an example. Let's say that you have a stock that's currently trading at $20 a share, and you want to buy that stock at $18. You set an $18 buy limit command. If the stock drops to $18 or lower, the $18 limit automatically triggers and purchases the stock for you. If the stock price is dropping fast, you actually could purchase the stock at $17.95, even though your limit was $18. Let's say that you own a stock and that stock is currently trading at $20 a share. You want to sell that stock at $22 a share. So you set a $22 sell limit command. When the stock reaches $22, the order will automatically be triggered and the stock will sell at $22 or higher. If the stock is moving fast, you may end up selling your stock at $22.10 instead of $22. Finally, the stop command. This command buys or sells a stock at the market price once the stock is traded at or through a specific price. This is known as the stop price. If the stock reaches the stop price, the order becomes a market order and is filled at the next available market price. Trailing stop. This command is designed to protect gains by enabling a trade to remain open and continue to profit as long as the price is moving in the investor's favor. The order closes the trade if the price changes direction by a specified percentage or dollar amount. This command is often used when you have a stock that is increasing in price and you do not want to sell prematurely, so you let it run, but you set a trailing dollar or percentage. If the stock reverses, your order will execute at the dollar amount or percentage it drops to. Good for day. This command specifies that the order you place will only remain in effect for that trading day and will cancel once the market closes. Good till cancel. This command specifies that the order you place will remain in effect until you cancel it. This means the order can remain in effect for days, weeks, or even months. All or none. This command tells your brokerage that you want all your shares bought or sold in a single transaction or none at all. Sometimes there may not be enough buyers or sellers to complete your full order, and the broker will try to fill a partial order. With this command, it is either all or none. Supplemental video. Sometimes there are videos that do such a great job visually explaining concepts, you just have to go with the video. TD Ameritrade created the next video and did such a great job that I included it in this course to help you get a better understanding of trading orders. In addition, I have included links to articles on Investopedia that give a deep dive into this topic. Please study those materials. Thank you for watching Trading Orders, and please move on to the next video.